Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 7th of December. All right, we're not quite into holiday markets, but you've starting to see some sort of holiday trading activity now. Euro, a little bit of a blip to the top side, and same with sterling, a little bit of a false break there. Aussie still continuing downside, and that goes with the whole theme today, which was a whole risk-off sort of situation, right? So Kiwi still sort of a little bit of fading. It's starting to trade sideways. Or same with the Aussie at that stage, but the Aussie still has that sort of more mildly bearish technical picture after breaking through the dailies yesterday. Now, so that's what's going on there. Now, the whole theme of the last 24 hours, I guess it really started with the in the Asian session where equities were starting to get pummeled. There's a whole heap of crazy news around, well, it depends on how you pronounce it, Huawei. I know that's not exactly correct, but that's the Chinese telco, which has been denied by Trump before. Equity markets, basically, check this out. The Dow Jones is down 0.3%, right? Looks like a pretty orderly day. At one stage, it was almost down 3%. Now, that's a bit of a catch-up from the day they had off the previous day, but equity markets have been getting hammered. Now, that sort of whole risk appetite, that pushed the euro and sterling to the top side. Aussie and Kiwi were sort of drifting to the downside. It's a little bit chaotic. You look at dollar one. Now, we've got some, this is going to be important today coming up because we do have some Chinese trade balance figures. Now, for most countries, the trade balance doesn't mean much, but for China, it does with all these tariffs. This is probably what Trump's been waiting for. So we're going to be watching that very closely. If you do see a sharp spike down in the dollar yuan, okay, the offshore yuan, then you may be starting to suspect that the information's out there in the market. Now, the one thing about what is a major concern is, coming up a bit higher here, is the trade balance here. There's no time schedule allocated. Now, some sites have this coming out on the weekend, and I know the Chinese CPI numbers are scheduled for the weekend as well, which is, you know, in normal market, normal times, I should say, not market conditions, that's quite ludicrous. So that's what we're going to deal with at the moment. So we'll see what happens there. Let me just come back up here to the top. I just want to give you a bit of a look at the overall news. Like, there's a whole heap of the hype is around the trade, potential trade, well, anxiety, discussions, wars, whatever you want to call it, around this Howie executive getting arrested in Canada. There should create more trade anxiety and issues with the US. There's also this risk aversion stuff, like the US yield curve sort of inverting. It's like, give me a break. We had this same story about 2 months ago, and it absolutely shot to the top side. Now, sterling, it's almost like in the same spot every day. The sterling, we've got the vote next week from Parliament, UK Parliament. This could go up, down 15 cents, and that's right, you heard it right, 15 cents next week in one go. It could rally 10 cents in one go on a yes/no vote. So this, we're going to keep see how that goes. Dollar CAD, okay, it's like dollar CAD still going to the top side, right? Now, the Bank of Canada governor today was talking about trying to give some clarity around their decisions. Their whole major concern about inflation, they reckon inflation is going to fall, and that's really revolving around oil. If oil continues to fall, growth in Canada is going to, they're worried about it falling off the map, and that's where inflation will fall. So they've tried to predict what they're going to do with interest rates around oil. So that's a guess. Now, he's also come out and said, you know what, we're going to wait until January to see if we potentially hike, because we're going to see what happens with oil. So that's why that weird decision yesterday on their statement, that's what that was all about. Okay, so you're trying to track like sensibly what's going on in dollar CAD. There's a lot of weird things going down, and that's why it's pretty hard to work out what's going on. Now, just coming back to the US dollar, just check out a few things here. Now, check out this yield curve. Now, this is what they're all talking about. They're talking about this curve here. I'll just get the pen on. Okay, so you got this sort of, I mean, this is sort of normal where it sort of slowly goes up. Now, if this flattens out, that means longer term rates are equal or lower to, or if it inverts, longer term rates are lower than short term rates, and that's where that sort of recession activity comes in. This is a long way from that. You know, it's a long way from a recession, but you know what? You've got to understand what the media are there to do. They're there to make money and sell stuff. So to me, there's a lot of hype in this, and it doesn't make a hell of a lot of sense. So just be aware that's where we are. Now, check out this on the dollar index. Now, I've just sort of blown up, and I was just showing a couple of people in the workshop here how the Fibonacci retracements work. Now, we've got the high in the dollar index up here around 103.82, and the low down here, let me just find my mouse again. Where is it? Over there. Okay, down here at 88.25. Now, on this way back up, we have got a bit of an uptrend, as we sort of know, even though it's sort of trading sideways just at the moment. There's only one sort of major Fibonacci left, the 61.8 at 97.87. You might want to keep an eye on that on the dollar index, because once everything settles down, to me, the US dollar's got still the strongest fundamentals. And if we get a crazy no vote out of the UK, sterling will drop, I reckon, 15 cents. This could put the dollar index way up here somewhere. So maybe that's the level to get into on the UK vote next week. So just above 98, the figure on the dollar index. That's going to be something to watch as we go forward for sure. All right, now let me just come back to the MyFX Trading Hub and try and piece together where the action is going forward. All right, there we go. So with the major activity here, next upcoming event is in sort of an hour and 40 minutes. We've got the US Fed chairman speaking. Now this is potentially, he's talking about the economy as well. So just be careful. This is definitely a high impacting event, one that you need to be watching very closely. Right, this guy is in charge of the biggest economy in the world. So let's keep an eye on this one. Don't forget, all traders in the funded trader program will need to be square all major pairs. And then from there, okay, we're waiting for the non-farm payrolls in the US and Canada. Now they come out at the same time. I'll be focusing on the US numbers. There's so much weird things going on in dollar CAD. You know, the Bank of Canada, oil, US fundamentals, CAD fundamentals, all sorts of stuff. And so that's probably going to be too hard. If anything, both of them are too hard, but we want to see what the US dollar does. If we get uniform numbers, we could see a big move to the top side. If we get really weak numbers across the board, well, then we're going to see a fall off. But that's going to be really interesting as we go forward from here. Brexit and Trump still hanging in the wings, both of them, right? Brexit next week is going to hit epic proportions with this vote. It's a binary outcome. You've got a yes, no. We are going to see sterling sort of move finally one way or the other, and it's going to be brutal. So I'll try and work out some sort of strategy there. As I was saying, that dollar index above 98, the figure might be the area to buy dollars on a no vote. You know, I think trading sterling is going to be way too ludicrous. Now, coming back down here to the major currency outlook, we are still pretty much with the same outlook as yesterday, even though we saw that sporadic movements today. Dollar CAD still bullish, but it's a little bit tricky. An entry level on that is particularly hard. Aussie is definitely the focus today. We've got mildly bullish conditions. It's sliding lower on the hourlies. It's broken down the dailies. We have potentially the Chinese trade balance coming out. That's our fundamental driver. If the Chinese numbers are weak, I'll be looking to sell Aussie, and that's the best trade in the market at the moment, right? But the big question mark is, are the Chinese numbers coming out today? I don't even know, right? And it's all tentative across all time zones at this stage, which makes it particularly hard to sort of gauge. I'm not going to sit in front of the screens all day and wait for that. If anyone has any connections in China, let me know and we'll post it on the site. But that's pretty much it, guys. It's going to get a little bit interesting from here. As I said, the Fed Chairman Powell's talking about the economy, and then we've got the US non-farm payrolls, probably the crankiest number in the market, right? So not one for the faint-hearted. I won't be trading it myself. I'll be watching it and looking for potential clear direction. And once again, if you're looking for a trading opportunity on the non-farm payrolls, well, you're really looking at the dollar index, to me, to get sort of like a clear trade on. And we do have a few levels here. As I said, if you look at the Fibonacci's, we've got a bit of a trend line here on the top side, around 97, sort of 45, 50. There's a bit of congestion on the downside, so maybe under 96 the figure. But we do need uniformity across all numbers. All right, just to finish up, I'll just give you a look at that. What we're talking about is you've got there's a bunch of numbers coming out, right? And because this is the major focus, I'll give you a bit of a run through. Right, we've got the non-farm payrolls themselves. This number here is the main number they all look at. Then you've got the unemployment rate. Unemployment is at amazing historical levels here. Then the average earnings. Okay, if you're looking at both month on month and year on year. You've also got these numbers down here, but these ones up the top here are the key ones: the rate, the earnings, and the non-farm payrolls. Now, you need the number here to line up on all three of these to get a good move one way. Otherwise, if it's one strong, it goes up. The other ones are down, it goes down. And that's where you get that 50 points up, 50 points down, and it's back to exactly where it was. So that's why it's a really tricky number to trade. I'm not a big fan of promoting myself as going in there to smash the non-farm payrolls. Sometimes it's set up really nicely. At the moment, with the way the US dollar is just trading sideways, this is a really big question mark and a high risk area. Maybe good afterwards. And that's where the action may be after the non-farm payrolls, because we've got the University of Michigan sentiment numbers, the prelim numbers, a good historical number there as well. And that's worth having a look at. Now, don't forget, I have sort of brushed over the Canadian numbers. They are coming out, but I think they're going to get swallowed up by the US numbers there as well. And especially with all the wild activity here on dollar CAD over the last sort of couple of days, it's a tall order to try and make a sense of real clear direction on dollar CAD just at the moment. All right, guys, that's the market insight as far as I can see at the moment. I hope you have a good trade day. I'll see you in the 247 live trade zone. Cheerio.